Growth stage venture capital. What is growth stage venture capital? It fits in after seed, after early stage, and then it's growth stage, and then even after growth stage is something called late stage venture capital. And there are different venture capitalists that invest in each of these different stages, and different institutional investors and different family offices and other types of sovereign wealth funds that all choose to invest at different parts along the venture capital food chain. Growth stage investors are a set of investors that are looking for certain criteria. The business has been significantly de-risked because it is had, at that point, probably tens of millions of capital that have been deployed into it, or at least tens of millions in revenue that it's getting by annual revenue from customers. And they're looking to scale the business, typically just through marketing and geographical expansion of the business from one place of the world to another. And so growth stage is going to, by necessity, require some level of that expansion capital. If, in particular, even if there's a positive margin contribution for each sale, it may take a while for each sale to mature. So in a lot of businesses, a lot of types of businesses, infrastructure businesses, things like, internet service providers, or telecom services, or lots of companies doing e-commerce where the customer acquisition cost sometimes is more upfront, but there's a very long tail in revenue that comes from it. Those are, in order to get sufficient scale to own the marketplace, they'll raise lots and lots of capital. And so what's the size of capital required, and what series is involved? At growth stage, again, early stage is mostly Series A and B. Series C and D, venture capital may be considered growth stage capital. And those rounds would be typically, say, $50 million or more than that, $50 to $100 million per round. So massive infusions of capital into a business that is already established, already figured out what its product is doing. It's not pivoting very much at that stage, but it just needs to grow internationally, expand its revenues, and dominate the market segments. The types of investors that are investing at the growth stage are lots of large investors with lots of money to deploy. That would be pension funds, sovereign wealth funds, and others of that kind, with lots of capital that they need to place in what they consider to be non-risky bets. The patience for a growth stage venture capital investor is, on the order of several years, say 3 or 4 years, up to, say, 6 or 7 years before they would expect to see their money completely exited through IPOs or through acquisitions. Growth stage. VC lingo. Lingo.